Can you take us behind how that deal came to be? I would imagine for you as an entrepreneur, that was a major milestone in your career. Take us behind that deal.
Sure. We've been getting phone calls to be acquired by interested parties since we started the company.
Okay.
And typically we don't respond to any of those emails or any of the calls and so on. So we weren't looking to raise any capital. We weren't looking to bring on a partner, whether private equity or strategic or whatever. I got approached by an investment banker, and it was actually a little bit of a fluke. I got approached by an investment banker from Raymond James Canada. And we were actually looking to increase our business development personnel. So I thought, oh, I'm going to chat with this individual because maybe we might be able to hire him. I got chatting with him. And, one of the things that we decided was going through a process and getting some offers, even if we don't bring on a partner, even just getting some offers, it's going to validate our valuation. So one of the issues that you have when you're bringing on advisors is you're saying to them, hey, come over because we're going to give you some cash and we're going to give you some equity. The cash is pretty easy to understand, but sometimes they question the valuation metrics that are used in private companies. And so the best way to establish what something is worth is if someone's going to give you that money for it. And as it turns out, we got far more money for our company than the conservative valuation that we were using internally. The main driver was to have that validation, to say to the industry, because a lot of advisors, sometimes they can't think beyond their practices, and they don't realize that they're so valuable by being the key to those relationships that they can do more than just manage a practice. They can own the actual dealership, and there's financial value there. They can own, auxiliary businesses. They can own an asset management company, and we have all those businesses under our parent company, which we're all common shareholders of. So again, just getting that validation, we thought, hey, it's important to go through this exercise. And then we later realized that we actually should do a deal. We should do a deal because we're going to get a lot of publicity because of it. And that's really going to be a catalyst for further growth. And we were right. We didn't do the deal because we needed money. A lot of companies that raise capital, they raise capital so that they can reinvest back in the business. Every single dollar that was raised was actually paid out to shareholders. There was nothing in the company, and nothing had to go back in. And in fact, we did the deal on a cash-free basis. So we also paid out a really large dividend. What this did is it demonstrated to advisors on the street, hey, this is real. This is not just theoretical. This works. I need to go and join Harbourfront, and they're doing it better than the competition. When you compare us to public companies, there's so many public companies out there. You can find out what they're worth today by just going to Bloomberg or whatever it might be. You know what their assets are, so you can do the calculation and you see that their value on a per dollar basis is significantly lower than us. So people are paying attention, saying, hey, these guys are doing something right. I need to find out more. And it's worked out.